Thank you for tuning in. This is Project Predict. This is the trend screen, which is a recap of a project, 50 homes, sell out of $10 million. This gives you every detail that you need to have to determine what the trend of your development is. There are over 100 values on this screen. We break them out into predicted, trended, and swing. Predicted is the basis for your construction loan or the project itself. Trended is what's occurring currently. Swing is the difference, and of course, because this is the first month of the loan, nothing's happened. I really want to show you what occurs when time goes by without activity. Right now we're looking at a $1 million profit. We're looking at a term of 20 months. We're looking at 6 units for monthly absorption and a sellout of $10 million. Here is the cost of the loan. This is the maximum disbursement, which is what the bank has agreed to and documented. This is your revolver. These are the categories of land, improvements, if any, construction, interest, marketing, and other costs. This is the mix. Model 1 will sell 9 times, Model 2 32, Model 3 9. These are the attributable sales prices for those models. These are the costs for those models. This is the gross value in terms of sales for each of those models. I want to show you how critical it is if time goes by without any activity. I'm going to move this up 2 months. The computer now has moved up 2 months. Let's take a look. Actually, it's only up 1 month. The predicted term was 20. It's trended to 30. Things are happening. The coverage on the margin is down a couple hundred thousand. Incidentally, I'm sure you remember that the bank wants to get paid back sooner than you. So this was the coverage net over and above your margin or combined. We predicted 6 monthly absorption. Now we're down to 2.5. The loan to cost is going down because the costs are going up by about $250,000. I'm going to move it 1 more month just to show you, which is what I really intended, what occurs. Now we're looking at 44 months, a swing of 24, and 1.47 absorption per month. The margin coverage is shrinking by $600,000, which is exactly what the maximum disbursement is up. These are the costs that have been accumulated: interest, marketing, and other. We're going to make a sale. How about that? That usually means things are going good. So we're going to put a sales in place on lot 1, and it's the initial contract, and it's the month of July, and it's model number 1, and it should be sold for 180, but let's say it's 190. And these are how you do it. This is the way it's done. Cost should be 90, and we'll leave it at that, and we'll enter this data, and here it is. Tells you everything about the contract, the month, the model number, the cost entered, cost variance, predicted sale. We're up 10,000, which is this variance. Watch this. You think it would make a big difference, right? It sure does make a big difference. Now we're looking at 107 months. We're looking at 0.5 monthly absorption. So we're up 3 months, and we're in serious condition on this project. We're already over $2 million to try and build it. The profit is disappearing. We have a negative of almost 400,000, so you're looking at about 600 right here. Let's see what happens if you add a couple of more sales. Let's go to lot 3. Let's put one in. Let's lot 3. Let's do an initial contract. Let's do the contract month, and we'll move it up to August. And we'll do model number 3, which is the most expensive. And let's use it, do it the way it actually was suggested. However, we're going to do a higher cost. And we're going to enter that data. And you're going to see the variance here because the cost is greater than was predicted. And it's a net 10,000 because these two numbers are the same. Let's go back up here. Take a look at the trend again. Now we're down to 58 months, which is a great improvement. Now we still have net coverage of about $1.3 million, but we're still in trouble here. Maximum disbursement, which is related to the number of months in the term. A couple other things. This is the sellout now because we don't have a sale for number 2. Let's see if we can work on that a little bit. Let's see how it works out. We'll put model number 2 in lot 4, and we're going to do it in the month of August, and it's going to be model 2, and the sales amount should be 200. Let's make it 195, and the cost should be 100, but let's do it at 105. And we'll enter that data. Move up the trend. We're down to 41 months, but we're still looking at in excess of 700,000. Where's that reflected? Let's go to the pro forma. We'll do the loan pro forma and show you where that number is. Right there. This is the trend that the development is headed toward. What this means is this is the way these dollars are going to be dispersed. This is the net coverage or margin. Let's go back and look to see. It's 2.606. 2.606. 1.6 over. We're still in pretty good shape, but we're doing 41 months. Let's show you again. 2 months up. No activity for 2 months. We're in trouble again. It's up to 73 months. Nobody's going to lend you money based on that. They're going to say, wait a minute, we need to get out of this. Your coverage is down to 700,000 net. So we're in real trouble here. Look at how much the maximum disbursement is. And things have changed slightly here, but the cost of producing everything is way out of whack because, look at this. You have to keep marketing. If you don't do that, you're not going to get anywhere, but it's costing well over $1 million at this point. I think this gives you a pretty good idea of what this screen does and how to look at the progress of a development. I do want to go back to the pro forma just to show you that things have changed. We're predicting sales in a different way. We're looking at 73 months. Way, way too long. I'm going to go to an annual look at this screen. 73 months. There's 749,000 left when this is over with. It makes money. However, it's devastating what you have to go through. Back to the trend screen. This is an indication of what's going on. There have only been 3 houses being built. Let's go and make sure that's accurate. 1, 2, 3. Back here again. Understand that you could come up with your own combinations of sales models. You can increase this sale percentage. You can decrease this. You can increase this. You have the opportunity to work on these things separately from what is actually happening so that you can provide a different scenarios to change the heading of this development, which is 73 months to complete. Thank you very much.